Taking a look at the markets, which are of course in the midst of an extensive rout. We're just about hovering near the 10,500 mark. The Sensex too has lost a little over 600 points. Like I said, on an intraday basis, I think this is one of the worst days we are witnessing in the last many trading sessions. So the markets clearly are taking it on the chin. Let's take that conversation forward with Neeraj Deewan, the director at Quantum Securities. Neeraj, thanks so much for joining in on ET Now. And you're joining us at a time when there's so much excitement around the 5 state elections. Now, while we may say that yes, the impact is going to be short-lived, it's temporary, only for about 48 hours actually is what many are touting it as. Still, from a perspective of these elections providing a cue of what will happen in the 2019 general elections, how are you reading into what the exit polls are suggesting?
Yeah, good morning. When we came into the exit polls, markets were anyways expecting that a state like Rajasthan will not come the BJP way. MP was more or less the deciding factor which everyone was looking forward to. And even market, the sense people were getting from people before also, it's going to be a tough fight even for MP. So that is what the exit polls are also suggesting right now. So I think today, market definitely, there is some impact of the exit polls on the market today. But then a large part is also because of what has happened, what is happening globally. The US sell-off, the Asian markets, down in the morning, and crude impact with the OPEC cuts happening over the weekend. So it's a multiple of factors which are affecting the markets today. So clearly tomorrow, after the actual results, we'll get an indication on how much the exit polls were correct or how much the actual impact is. So if we really going to get something like a totally against verdict against BJP, that definitely will be a negative for the markets as well as what is happening around us as far as political scenario is concerned. So I think one should wait tomorrow to see the actual impact, and more than then we need to look at how global things will pan out, because a US slowdown, or earlier, US was really growing, really going up a lot, but we were getting outflows from our country. So a US slowdown may actually increase the inflows into emerging markets. So we have to see how each story plays out, whether it's the global slowdown, how much the crude will impact because of OPEC cuts coming in from January. I think all that is going to be more important also to look at. But I think as far as political scenario is concerned, we'll have to wait till tomorrow and see how exactly it pans out.
Are you working out any scenarios of outcomes of the elections and their impact on the markets?
I think if it is going to be a totally against BJP kind of a verdict, that will have a little longer term impact, because that if it's going to be very close for BJP as far as MP Chhattisgarh is concerned, and they barely make it, and then that's still going to be somewhat forgotten in a couple of days, and then people look at this being like a something for BJP will wake up, and next 6 months can be good for economic steps are concerned. There can be a lot of positives which may come in because of that. So, but if it is totally against them, and then that can have a little longer impact, because then we'll feel that in 2019 would be very difficult for them. So that will be a difficult scenario. So I would like that though it is a marginal case, if MP and Chhattisgarh come the BJP way, that is something like a good scenario for the market.
All right, fair enough. You briefly alluded to what exactly is happening in the global equity markets, and we've seen quite a reversal in how the US equity markets move. First that revival, and then subsequently a massive downtake. Last week we saw that first an 800 point, then another 200 odd points gone. So it's been a massive reversal that we've seen in US equity markets. Like you said, it does mean more flows as such for DMs, but how do you see the impact for Indian equity markets? Because we do tend to pick up a substantial amount of cues from the way US is moving.
Yeah, see, if US is slowing down or there's some slowdown fare there, that will impact definitely, but then that's going to be some sector specific, stock specific impact for the companies which are basically dealing with or get impacted by US slowdown. But as far as domestic consumption is concerned, your domestic infrastructure, your domestic development is concerned, I think there it will not have a major impact. And if actually you're going to get interest rates are not going to go up in US for some time now, if that is the kind of scenario which builds up because of the slowdown, and our domestic inflation is low, our interest rates are also not going to go up, that scenario will really, we'll get some inflows into our equity markets, which can really increase. Emerging market inflows will meet some coming to India also. So that's going to be positive for us. So that's why I'm saying that you can't really take it negatively for India. So we need to wait and watch how it plays down. But things like crude growing up, if that can have a negative impact on us. So it's a multiple factor. It's crude, it's US slowdown, it's money flowing into emerging market. But as far as the kind of impact we've seen in crude just for a day right now after the OPEC announced the cuts, the kind of the upside swing we saw is not too much, even after the cut they've announced. So there's a possibility that crude stays between this 60, 67 kind of a band. If that is the kind of scenario we have for a medium term, that will be positive for India, for emerging markets.
Okay, fair enough. Let's just talk about, I want to shift gears and talk about individual sectors. NBFCs, quite a messy situation, but many are saying that, liquidity concerns are easing. Do you believe that the market is still a bit jittery about the space, however, and do you think that we're at the peak of fear when it comes to NBFCs?
Yeah, I think we are at the peak of fear, because I also feel that when we speak to people, so there's definitely some easing happening as far as liquidity is concerned. And we saw this kind of scenario playing in 2013 also, where we had the liquidity crisis for NBFCs, and it was, it took a couple of months before it started coming back to normal. So I think now also this kind of scenario can return. Some companies we speak to also are saying that some growth is again coming, some demand is again coming back, and they've been able to raise money, so they've been able to repay whatever was due to be repaid. So I think there also one needs to be selective. You can't, like we saw NBFC, rally happening across the board. So you can't expect that to happen in the near future. That may take some time. But as far as if you are stock specific, I think there is value there. So need to stay with the stronger NBFCs which have a stronger parentage. We will not have a problem as far as liquidity is concerned, or to raise money at these markets. I think those kind of NBFCs can still grow from these levels. Though this third quarter will be challenging, will be a negative growth, will be washout kind of a quarter for them. But then we are going to look at how fourth quarter is going to play, and from onwards from there. So there are NBFCs which have been growing at 10% plus for the last so many years. They can continue growing. This one quarter will be forgotten very soon.
Ask you two questions rolled into one, and both are stock specific questions. One is Kotak Bank. There are media reports talking about a fund infusion, though Kotak has of course denied the story yet. Let's just say they're mum on the story yet. But how do you see the story play out for Kotak Bank in either scenario? And secondly, you have Bajaj Auto as one of your top pick. What's your rationale given the fact that, as we know, there is this sort of slowdown in auto space, though not necessarily for two-wheelers. But yeah, I just want to get in your perspective on both these stocks.
See, Kotak Bank, I feel that it is too early to say how they're going to play, whether they're going to be fund infusion. But then, they are running out of time. They need to have, that equity, promoter equity levels down. So they're going to have something going to happen, I think, sooner than later in that stock. But as far as private sector banks are concerned, I think, they will continue showing that growth which they saw, because Indian consumption story is something which is strong. Retail credit is also going to be strong. So Kotak Bank in that scenario will have that growth. So fundamentally, as far as growth is concerned, I am positive on Kotak. But short-term volatility will depend on what kind of, the news flow which comes regarding the stake sale. So on that matter, I can't really comment right now. And as far as the Bajaj Auto is concerned, I think Bajaj Auto, though there is a concern which was building up because of interest rates, because of crude, I think these two things have sort of eased in the last couple of weeks. So I think if that is going to be the case as far as crude is concerned, if crude is going to stay in a range, the lower range that I'm talking about, 60, 67. And if interest rates are going to be, the scenario here is going to be dovish as far as the RBI is concerned. I think Bajaj Auto had a strategy where they want to gain market share by decreasing the prices. So that has really played well in the last couple of quarters for them. So, and plus, the three-wheeler growth is coming, the three-wheeler capacity is increasing. So I think Bajaj Auto growth is going to be good as far as a few quarters are concerned. So they can be one quarter aberration here and there, they can be one negative quarter. But I think over the next 1.5 years, I think the strategy is going to in play, and they're going to increase their market share bit by bit, and that's going to help Bajaj Auto.
Okay, Neeraj, we'll let you go at that. Thanks very much for joining us and giving us your perspective on the markets.
Thank you.